Jim Royse is a CFE, Certified Fraud Examiner, and he's our Executive Director of County and Local Government Audits. He became the APA Executive Director of the Office of Local Government Audits in July 2020. Prior to that, he served as the APA Deputy Executive Director since 2012. As I mentioned, he's a Certified Fraud Examiner and began his state career with the Auditor of Public Accounts in 1994. His past positions at the APA include Financial Auditor and Audit Manager, and he's a graduate of the University of Kentucky. He'll be joined today by Lleslie Wilson, who is also a Certified Fraud Examiner. She graduated from Lindsey Wilson College in Columbia, Kentucky in 2000 with a bachelor's in accounting. She began her career with the Auditor of Public Accounts that same year. In her 20-plus years at the APA, she has worked on many different audits, including state agency audits, local government audits, and served on various committees at this office. She currently manages county audits for the office in 29 counties in Southeast Kentucky.
All right. Well, Jonathan, can you hear us?
I sure can.
All right, great. Well, thanks, Jonathan. Lleslie and I are very happy to be here talking with you. As Farrah said, congratulations to the new officials and congratulations to all the other officials for continuing in their office. What we will be going over today is the bookkeeping and important dates. As a new official, you may not know what is required of you regarding your bookkeeping and your financial statements. So we've had audits in the past where we show up to do the audit of the year past, and the official would say they had no idea what they were supposed to be keeping. They didn't know what ledgers or quarterly reports they were supposed to be keeping. So we wanted to use this training to help you prepare and gain knowledge in what is required. All right, for our agenda for this training, we're just going to be discussing your bookkeeping responsibilities on a daily, monthly, quarterly, and annual basis. And then we're going to go over some important dates for your office. While each office, like a fiscal court, clerk, sheriff, a jail commissary, or PVA, or other office, they're all different a little bit. There are minimum requirements and standards that each of them should meet. So we'll be kind of going over these minimum requirements for each office, and we're also going to go over some specifics for each different office. When you're setting up your books and accounts, how do you know what you're required and what you need to follow? As Farrah discussed a little bit, we do not make the rules. As auditors, we audit to the rules and requirements that are in place. So sometimes you may hear that the auditors require this or that. It's not the auditors requiring it. It is some law, regulation, or DLG manual that may be requiring that. So in our presentation, you will see where we copied in certain parts of the DLG manual or the KRS to help you show where that information is coming from, so you can go back later and maybe research it further. So the answer to how do you set up your books and accounts is found in the DLG manual. It states that you are required to comply with the Uniform System of Accounts. Under 68-210, DLG is mandated to set a uniform budget system. They are required to review this system to ensure it is consistent with state law and make any revisions when necessary. Also, they can require all local officials to submit financial reports. So if you look at this KRS 68-210, that is where DLG is required to get that uniform system of accounts. So now you may be wondering, where do I find this uniform system of accounts and where does it lay out all the rules that you're supposed to follow? The one main document is DLG's County Budget Preparation and State Local Finance Officer Policy Manual. That is a large title, so you'll just hear me refer this to as the DLG Manual throughout the presentation. Every county official needs to become very familiar with this manual, and they should read it so they can understand the requirements. You can find it at DLG's website, so that link is noted here on the slide. Just go to DLG's website. There's a county section, and you can see in the county section, it will have that DLG manual. In DLG's manual, it states the minimum requirements pursuant to 68-210 for all local government officials and their employees to follow when they're handling public funds. Not only does it go over the bookkeeping and record keeping requirements, it also goes over other items like budgeting, bonding for officials and employees, publishing requirements for your financial statements and publishing audits, and other important information. Also under KRS 43075, any auditor that performs an audit of local officials shall determine whether the fiscal court or county official is complying with the uniform system of accounts that has been adopted under 68210. So this manual is what we are auditing to. Also, any audit finding that we write is required by auditing standards to have a criteria. So we have to base our finding on some type of criteria that requires requires you to do something in a certain way, or a law or regulation that you have to comply with. So most of our bookkeeping findings refer to the uniform system accounts and under KRS 68210 and the budget manual. So where do you start? As shown, you must break down any big task into a small task. So you have to break it down. Another way of thinking about this is think about the mystery of how did they build those pyramids in Egypt. This picture sums it up best, where it says, I reckon they just started at the bottom and worked their way up. You do have to admit that starting at the top would be more difficult. However, we do find in a few audits after the election changeover that the new official did not know what they were required to do throughout the year. And once we got there, they tried to create those financial statements so we would have something to audit, which is pretty much like trying to build a pyramid from the top down when that would be impossible. So if you didn't have all your records together, when we go over the daily, weekly, monthly duties, you can't really create a financial statement at the very end and have that presented. So what we came up with is to help you is the bookkeeping pyramid to help illustrate what you must, there's certain things you must do daily, monthly, quarterly, and to ensure that you actually end up with an annual financial report. Over the next slides, Lleslie and I will go over your responsibilities. Note, while these are the main bookkeeping items, it's not an all-inclusive list of your daily, monthly, quarterly, and annual duties. There's so much more that you are responsible for, like there could be additional payroll requirements, additional grant requirements. This training will not cover. We are just trying to give you the main items needed to ensure proper financial reporting. So let's get started with your daily requirements. So at the base of the pyramid, you're only as strong as your base to build that pyramid. To help ensure everything is correct, you have to have everything you need to complete your annual financial statement. That you have to have those records needed for your annual audit. You must ensure everything is done daily. I will go over the following 4 items: daily receipts, daily receipt ledger postings, the daily deposits, and disbursements. Accounting for your receipts daily is vital to ensuring you'll be able to balance your monthly, quarterly, and annually. The following 5 important steps for your accounting for daily receipts. First, a receipt should be issued for all monies received. I will go over the KRS and the DLG manual references in the next couple of slides. Next, at the end of the day, you must total up all your receipts and complete a daily checkout sheet. This daily checkout sheet summarizes your collections for that day. It will help you categorize your collections so you'll be able to post those to your totals to your receipts ledger. Next, you will post the amounts to your receipts ledger and then fill out your deposit ticket. And lastly, you will deposit those funds into the bank daily. All this must be completed daily. So let's look at those daily processes a little more closely. So first of all, why do you have to do this? There are 2 main reasons. 1, you are required to under the KRSs and laws and regulations. And 2, it's just good internal controls to ensure all money is properly accounted for and deposited into the bank daily. KRS 64840 is the KRS that requires a receipt form to be issued for payments received. It states, except for taxes collected on behalf of the state for which there was a supplied receipt form, all county offices shall, upon the receipt of any fine, forfeiture, tax, or fee prepare a receipt that meets the specifications of the state local finance officer. So the state local finance officer is, DLG. They appoint someone to be the actual state local finance officer, and those are the requirements under a uniform system of accounts. Also, it should be a 3-part receipt form. One copy of the receipt form should be given to the person paying the fine, forfeiture, tax, or fee. One copy shall be retained by the official for their records, and one copy shall be retained by the official to be placed with the daily bank deposit. Also, if you look in the DLG manual, not only is it in the KRS, it is in that DLG manual, the Uniform System of Accounts. It states that a pre-numbered 3-part receipt form should be issued for all receipts. Like the KRS, it states the original should be given to the payer, a copy should be attached to the daily checkout sheet, and a copy shall remain in the file. Any voided receipt should also be marked void, and those copies should be maintained and put with the daily checkout sheets. Pre-numbered receipts are very important. By having them pre-numbered receipts, this helps ensure that you're accounting for all those receipts in a given day. When you do your daily checkout sheet, you should ensure that you have all the receipt forms in the number range that was given out during the day. So you need to look at the last number given out the day before, the last one for that day, and make sure you have accounted for all the receipt numbers. If one is missing, you need to determine what happened to that receipt form. That way you make sure you accounted for them and all the receipts are accounted for, and you can deposit those funds in the bank. Next, the receipt form should document if the funds are received in cash, check, or credit card. This is important because if you have issues at the end of the day reconciling the daily receipts to your records, you can go back to determine if maybe there's an error in the cash, checks, or credit card. It will help you zero in on the errors faster. Also, the KRS and DLG manual says that these receipt forms should be batched and attached to the daily checkout sheet or daily deposit record. Once you've completed your daily checkout sheet, you will need to post these amounts to your receipts ledger. Some of you may wonder what a receipts ledger actually is. A receipts ledger is a daily chronological listing of all the receipts. The listing is a book of original entry for all revenue. This receipts journal or receipts ledger should indicate the date the money is received, a description of the revenue source, the revenue account code, the total amount, and the funds in which it is distributed. The cash receipts journal is done daily, and then it is totaled monthly. Note that it can be electronic, or in most offices, they do have some type of software program that accounts for it, so it can be in paper or electronic. In most clerks, sheriff's offices, for example, the collection of taxes and fees will be completed in some type of software program. This software program will do a lot of the daily processing behind the scenes. It will print out the receipt forms. It will batch the daily receipt forms. It will produce a daily checkout sheet. Then it will actually post to your ledgers. So as auditors, we cannot endorse or tell you which computer system or software to use, but you do need to ensure it can meet all the requirements of the Uniform System of Accounts and produce the records needed for your use and for the audit. Here's a very simple example of receipts ledger for a county clerk. I just did this using Excel. As you can see, it is posted to daily, and then you post the amounts from the daily checkout sheet, the total amount for each type of receipts. And you can see, this is for a county clerk. For on October 3rd, they received like $3,540 in usage tax. They posted how much was received in delinquent taxes, deed transfer, and then that total was for the day was $5,280. You would get these amounts from your daily checkout sheet. Then you will total the amounts up daily, and then at the end of the month, you would have monthly totals. Again, this can be done electronically in any type of software program, or if you had paper ledgers, if you still wanted to use those, there are some officials that do, then you can use a paper or electronic form. Let's talk about daily deposits. You may be thinking, do I really have to make a deposit every day, even if I only receive $5 one day? Yes, the answer is yes, you have to make daily deposits. You are required to make daily deposits. The DLG manual states you are required under the Uniform System of Accounts to make daily deposits intact into a federally insured banking institution. When we come to do your audit, this is one thing that we will be checking for, along with ensuring you are completing the full accounting for your daily receipts. So let's look at this DLG manual part a little closer. So what does intact mean? As it said, you're supposed to make daily deposits intact. Intact means that intact means the makeup of the deposit should mirror the actual funds received for that daily business. So if a payment was made in cash, then the cash should be deposited. If it was made by check, the check should be deposited. You should not change the makeup of the deposit by maybe cashing personal checks from the cash drawer, or you shouldn't withhold cash for some other reason and not deposit it. These deposits need to be made, the full deposit needs to be made, and it needs to be made intact daily. So once you get done, then if you did it all correctly, everything should agree. Your batch receipt forms for the day, your daily checkout sheet, your daily ledger posting, and your deposit all should agree. If it doesn't, you need to make sure and stop to figure it out. Do not wait to try to figure it out later. It's hard to go back and try to figure it out days or months later, or figure it out when the auditor comes. An auditor's responsibility is not to go back and try to find all your errors and all your mistakes or figure out why you couldn't balance. As Farrah said, we're taking samples and we're determining if that financial statement is accurate. So, we can't go back to every single daily's business and try to balance that for you. That is not our responsibility during an audit. So if something doesn't agree, stop right then and there, try to figure out and try to get that to balance. So let's move on to disbursements, another part of the base of the pyramid. First, how do you actually make that disbursement? How do you pay your bills of the office? Per DLG's manual that's pasted here on the slide, DLG manual requires all disbursements by check only. So that means you need to write a check for any disbursement of your office. Now note, there are a few exceptions to the disbursements by check only rule. For example, some IRS payments are required to be made by ACH because that's the only way the IRS would accept those payments. Or some of the tax payments for clerks and for county clerks, like usage and license payments, they must be sent over by ACH because the KRS spells out and says they should be sent by ACH. However, if there's not an exception allowed by the KRS or another law, the disbursement needs to be made by check. You can pay by credit card, since the payment to the credit card company will eventually be paid by a check, but you need to ensure that credit card is paid off each month and there is no interest or penalties charged, since paying of interest and penalties is not allowed and not a good use of taxpayer dollars. Also, debit cards should not be used, since all disbursements should be made by check. When you're making disbursements, they should be for a public purpose. As you can read under KRS 68080, the fiscal court can appropriate county funds according to 68210, which is a Uniform System of Accounts, for any purpose required by law. For fee officials like the clerks and sheriffs, their disbursements are governed by a court case, Funk versus Milliken. It states for a county fee official's disbursements to be allowable, they must be necessary, adequately documented, reasonable in amount, beneficial to the public, and not a personal expense. So before making a disbursement, you should think, is this something necessary for my office? Things like office supplies, payroll, training, office equipment, those would be allowable items to purchase for your office. Something like paying for your lunch every day or buying the family grocery would obviously be an unallowable expense due to those being personal expenses. Other items that are unallowable that officials do not realize are items such as flowers for funerals, illnesses, or other occasions. While you may want your staff to know that you are thinking of them, these items should be purchased with personal funds. Also, as I discussed earlier, penalties and interest are not an allowable expense since you should be paying your bills on time and you should be filing all your reports on time. In our fee audits, if we find unallowable disbursements, they will be disallowed, and there will be a finding explaining this in the audit, and then it will require the disallowed disbursements to be reimbursed by the clerk or sheriff from personal funds. So you don't want that in your audit. All our audits are published in the paper. We send press releases to the paper on all audits released. They're all on our website. So you don't want to have disallowed disbursements in your audit. So once you make that disbursement, once you write that check for each disbursement, it needs to be posted to the disbursements ledger. Here again is a simple example of a disbursements ledger. It will show the date of the expenditure, the date the expenditure was made, the check number, who the payee was, and the amount. You will post it under the category for which it was, like office supplies, salary, or delinquent taxes. Again, this can be done in paper form. You can have a software program that will track all your expenditures, as long as you can, at the end of the month, quarter, annually, be able to have a categorized listing of all your disbursements for the year and be able to create those reports that are needed. When we come in to do the audit, you need to have all your disbursements adequately supported and documented. You need to have the original bill, invoice, receipt, contract, or agreement. If you actually use a credit card to pay, then you need to keep those itemized receipts and batch those receipts to the credit card statement. The credit card statement alone is not enough supporting documentation. When we come to test those expenditures, we need to know what was actually purchased. So on a credit card statement, if it just said that credit card was used at Walmart, we wouldn't know if you actually purchased office supplies or your weekly groceries. So having that itemized receipt for the purchases will support that actual disbursement. Also, if your admin code or if your travel policy reimburses for meals instead of doing a per diem, you have to have the actual itemized receipt for that meal, along with probably that final total receipt that shows total and tip. This will help you ensure you're reimbursing for unallowable items, like maybe alcohol. If that alcohol was on that dinner ticket, you wouldn't want to reimburse for that. So for payroll, adequate supporting documentation for those payroll expenditures would include timesheets, individual earning records, W-2s, and other payroll reports. For procurement and how to make those disbursements, I'm not going to spend a lot of time on procurement, but wanted to say something about it. First, before making any expenditure of funds, you need to make sure you have the cash in the bank and determine if you have enough budget to spend. When we come to audit, we will audit to your procurement code and the laws and regulations on the books. So we will be looking at the purchase order system for the fiscal court. We will determine how items are supposed to be procured when bids are necessary by reviewing your county administrative code and the applicable KRSs on procurement based on what the county has adopted. If you have questions on how to properly procure something, the best place to start is your county attorney, so they can help guide you through all the regulations and procurement. So by doing everything I just discussed, this will help you ensure the base of your pyramid is strong and that you have a great start to ensuring your monthly, quarterly, and annual duties will be supported. So how do you make sure all this is being completed? If you have someone besides yourself completing all this, then you need to make sure and just not assume that everything is being done like it's supposed to be done or is done correctly. As the elected official, it's up to it's your responsibility to ensure everything is being done correctly. You need to have controls in place to make sure it's completed. You need to check in with your bookkeeper or treasurer to see if all this is completed. We will have a section later this afternoon on internal controls that will help you understand what controls to have in place. We have been in plenty of offices trying to do the audit of the audit, and the county judge, clerk, sheriff, or jailer had no idea that the books were in such a mess and that nothing was completed. So just do not assume it's being done. This is already the 18th of January. So if you go back to your office after this training and find that these daily responsibilities have not been done for the last 2.5 weeks, you will need to correct it as soon as possible. This is all I have for me for right now. I'll turn it over to Lleslie to talk to you about some of your monthly bookkeeping duties.
Okay, thanks, Jim. Like I said, I'm Lleslie Wilson. I'm the Southeast Audit Branch Manager, and I'm going to talk a little bit for a few minutes here on monthly duties. So we're going to move one step up in the pyramid from daily to monthly, and I'm going to discuss a little bit of the following: the monthly ledger totals, your monthly bank reconciliation, and then other monthly reports. And I think Jim had a copy of this slide a few minutes ago, and he went into a little bit of detail about the receipts ledger, but this is just an example of your disbursement ledger. And like he said, it can simply be an Excel worksheet, or you can use software. A lot of offices use QuickBooks and so forth, but or it can be paper copy. But you can see there that on October the 3rd, check number 2051 was written to J. Smith for payroll. So at the end of the month, all those categories should be totaled up at the bottom. So whether it's done manually or through Excel or software, you should be able to total all those up. And we'll discuss this a little bit more in a later slide, but those categories there, the salaries, delinquent tax, office supplies, those categories that are on your ledger should match and agree and be the same as the categories on your fourth quarter financial report. And so these ledgers, your disbursement and your receipt ledger, should be posted daily and then totaled monthly. So we're going to talk first about monthly bank reconciliations, and these are a requirement in the DLG budget manual. That's pasted directly from the manual as part of the uniform system of accounts. So we're going to spend a little bit of time on bank reconciliations because this is a area that we see a lot of issues with in the counties. So why are they important? Well, okay. First, we'll start out with what is a bank reconciliation. Sorry, I got ahead of myself there. So bank reconciliation is a summary of banking and business activity that reconciles your bank account with your financial records, and it outlines deposits, withdrawals, and other activities affecting a bank account for a specific period. And so this would be monthly. So why are they important? Well, when you're doing your bank reconciliation, you may uncover differences that you need to further investigate. You might find bank errors, or you could possibly find errors that you've made. And they're also help to create stronger internal controls. And we'll talk more this afternoon on internal controls, but more of a system of checks and balances. And they ensure that your account balances are accurate. So you really know your financial condition of your county. Okay, so sometimes when you're doing your bank reconciliation, you might find some problems. And this is not on a slide, but just a few common problems that you might find. Number one is that there are checks that have been returned after being deposited. So sometimes, the bank declines a deposit of a check, and you may not have that in your records. So we'll help you with that. Sometimes you have voided checks that the bank clears anyway. So that may be something that you discover. Or if you fail to communicate with your bank regarding a voided check, it could result in a double payment. So, the payee could cash the voided check and the bank honored it, and then you've reissued another check. So you've got double payment there. And then also it's going to help you identify uncleared checks. So, sometimes you have checks that have been outstanding that haven't cleared for a long time. And, at that point you might realize, hey, look, I've been carrying this check for some time now, you probably need to investigate what's going on there. And in some cases, you might need to void the check and issue a replacement check. Okay, so where do you start? So what records are needed when you do your monthly bank reconciliation? Well, first of all, you need your bank statement. You need your receipt and disbursement ledgers, your check register, and then your financial statement and your quarterly report. So we're going to look at a bank reconciliation. And so here's some common or some definitions of some things that you'll see on the bank reconciliation. Deposits in transit, which is funds received and recorded in your records that haven't been processed by the bank. So you've made the deposit, but it's not been posted by the bank yet. And then outstanding checks, which are checks that you have written that haven't cleared the bank yet. So here's just a little flow chart of the bank reconciliation process. So it's to help you. So you're going to try to identify the difference between your cash books and your bank statement. So first of all, you want to look at your cash books and mark off things that are on the bank statement. And so if there's things on the bank statement that are not on your books, then those are things you want to adjust your cash books for. And then you're going to prepare your bank reconciliation. So the goal of your bank account reconciliation is to ensure your records align with the bank's records. And this is accomplished by scanning the two sets of records and looking for discrepancies between the two. And if you find errors or omissions, you need to determine what happened to cause the differences and work to fix them in your records. Okay, so here's a little bit of an example of a bank reconciliation. And this example is pulled from the DLG budget manual. And a lot of software, I know QuickBooks has a bank reconciliation piece to it, but there used to be, when people got paper bank statements, the bank reconciliation used to be on the back of those, and you could use that and do it by paper. So to start out, you start out with your bank balance, and this is pulled from your bank statement. And then you're going to add in your deposits in transit, which, like I said, are deposits that you've made but are not on the bank statement. And then you're going to subtract any checks outstanding, which is checks written that haven't cleared the bank. And then there's a space there for other, and that could be anything else like bank charges or anything like that that you haven't recorded in your records. And so you put that, and so that would total up to be your reconciled bank balance. And just a little auditor's note here, a bank reconciliation is not just recapping your bank statement, taking your bank statement and copying it over into a bank reconciliation form. We see that all the time. It's more than that. It's tying your books to the bank, and it all should agree. So if your dailies agree, like Jim went over, and all those things agree, then your monthlies are going to be a lot easier to get into agreement. And then the other part of the bank reconciliation is balancing your books. So you're going to take your book balance per your ledgers, general ledger, and then add anything that's not posted, like bank interest, or if you have any electronic deposits that aren't posted. And then you're going to deduct off like any return checks, NSF checks, bank fees, other, and total all that up, and that should be your adjusted book balance. So your reconciled bank balance and the adjusted book balance should agree. So be sure to record any unrecorded amounts to your ledgers. So again, we're building this pyramid. So if all of your daily accounting agrees, then your monthly accounting will be a little bit easier to agree. And if you balance monthly, then your quarterly and annually are going to be easier as well. And so, if you make sure that you balances each month, when we come in to do your audit, this is going to ensure your audit's going to progress quicker and go a little bit smoother. So during our cash work on our audits, we perform what's called a proof of cash, which is basically just what you did. So we're going to make sure that your ledgers, everything that's recorded on your ledgers and your books, reconciles back to the bank activity. So if you're agreeing monthly, then this is going to be a lot easier for us. Okay, so this slide is a little bit about internal controls, and we're going to have a session, like I said, on that this afternoon after lunch. And this is just basically when you do your reconciliations and you have, make sure that you document things that you do. If you have any comparisons made, adjustments, or reconciling items identified, make sure they're in sufficient detail and clear to enable someone to effectively review it. And, management should expect those that are in charge of doing that to have clear documentation of their process, so it can be easily confirmed by others and reproduced if needed. So, and during your audit, something you're going to hear a lot is something called segregation of duties, and which just means that the person who performs the monthly bank reconciliation should be separate from the person who posts to the ledgers and processing of receipts and disbursements. And so if that's not possible, you can implement some controls to compensate for that, such as someone that's not involved in the process reviewing it. So if you do any kind of reviews or whatever, make sure that you document the review initially. And I'm sure this will be gone over a little bit more in the internal controls, but just document what you do. Okay, and then here's just a few of other monthly reports that responsible by the clerk would be delinquent tax, legal process, deed transfer, motor vehicle licensing, tangible personal property. With the sheriff, we have the monthly tax collection reports, and this list is really not all inclusive. There may be others. We just noted a few here. And then this KARS 68.360 just spells out the monthly balancing for the county treasurer. That says the county treasurer shall balance his or her books on the first day of each month, so as to show the correct amount on hand belonging to each fund on the day the balance is made, and shall within 10 days file with the county judge executive and members of the fiscal court a monthly statement containing a list of warrants paid by him or her during the month, showing all cash receipts and the cash balance at the beginning and at the end of the month, and certifying that each warrant or contract is within the budget appropriation. So like I said, this is just talking about the monthly balancing and reconciliations. Okay, now we're going to move up another step in the pyramid to talk about quarterly, and I'm going to turn it back over to Jim.
All right, before I begin, I think Jonathan has a surprise for us.
I think so. I know you all are sitting there and you're saying I'm getting a lot of great information, but the only thing that's really missing out is I just want to win some money, right? Like I want to win a prize for sitting here. So we thought beforehand, we all worked independently. We pitched in our own money to buy some Amazon gift cards, and I'm going to share my screen so that you can see what we've got here. You should be seeing this lovely wheel. Is everybody seeing the wheel over here? All right, I'm not seeing anybody shaking their head no. So I've put everybody's name in here that does not work for the APA. Sorry, if you're part of the APA, you're not going to win this today. I also removed, there were a couple of you who were trying to cheat and got 2 entries in here. So I found those and I removed it. We're going to go ahead and spin the wheel and see just who's going to walk out of here with a prize. I don't think you get to hear the sound, but mine has a nice little wheel of fortune tick, 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 tick. All right, Cynthia Wilson out of Bourbon County. Cynthia Wilson out of Bourbon County. We're going to contact you with your gift card. If you're one of those offices that has multiple people there, I'm sending it to Cynthia. So you all hit her up for the rest for your all share. But otherwise, congratulations, Cynthia. And we'll have a few more drawings today, later on in the day. You do have to be present to win. So if you're not here, I drop your name off the wheel. Jim, do you want to go ahead and reshare your presentation?
Sure. How's that look?
Good. We're back on quarterly.
All right. Great. You had me scared there having to share again. So Well, congratulations, Cynthia. Even though, we are independent, that was Will. That's my home county of Bourbon County. So great job, Bourbon County, for winning that prize. So thanks, Lleslie. I'll go now talk about your quarterly bookkeeping responsibilities. One of the most important responsibilities is your quarterly report that you must submit to DLG. The fiscal court, clerk, and sheriff all must submit quarterly reports to the Department for Local Government. So if you followed our advice and ensured everything was completed daily and monthly, then this quarterly report should be very easy for you to do. The quarterly report for the fiscal court, you need to complete the quarterly report and submit to DLG following the close of the quarter ending March 31st, June 30th, September 30th, and December 31st. This quarterly report needs to agree back to your receipts and disbursements ledger. So if you go back and add up your monthly totals from each ledger for those 3 months, those amounts should agree to your quarterly report. Also, I will show you in a couple of slides that the quarterly report should also agree back to your bank reconciliation. So looking at the DLG's budget manual, the DLG manual, let's see what the manual says about the fiscal court's quarterly report. It states that all county money is to be reported on this financial statement, whether it is included in the budget or not. The quarterly reports are cumulative and should be signed by the county judge and the county treasurer pursuant to 68-210. Again, 68-210 is that uniform system of accounts. The fiscal court's quarterly report is broken down into 6 sections, with sections 5 and 6 only due on the 4th quarter yearly report. Section 1 is a summary and reconciliation. It will show you the total receipts, total disbursements, and fund balances for each fund of the county, and it will then show that it actually agrees to the bank. Then it has a receipt section that reports all receipts received and is broken down by fund and receipt category. The liability section for the fiscal court reports all the county's debt, including any public property corporation debt. It will show items like the terms of your debt, the principal outstanding, the payment amount for that debt. The next section is on your disbursements. It will report all the disbursement activity and will show you, the fiscal court, the judge, treasurers, where your budget appropriation actually stands at the end of that quarter. With the 4th quarter report, you're supposed to report your fixed assets and also present a schedule of expenditures of federal awards, also known as a CFA. The CFA is very important, especially with all the federal funds that were sent to all the counties over the last couple of years. On the CFA, you're required to report the total amount of your federal grant expenditures made by your county, regardless of the amount of federal expenditures made. The fiscal court, clerk, and sheriff should all complete a CFA of their federal grant expenditures. Lleslie will go over this CFA in more detail when she goes over your annual bookkeeping duties. But DLG, once you submit those, the fiscal courts and clerks, if you submit those with your quarterly reports, DLG does send us a copy at the end of the year. So that's why it's important to make sure you submit that CFA to the DLG. Next, it says the quarterly report should be submitted to DLG by the 20th of the month following the close of the fiscal year, and a copy must be posted in the courthouse. The fiscal court's quarter report needs to be the 4th quarter report needs to be filed within 15 days after the end of the quarter per KRS 68-360. So again, just don't assume this has been done. Check with your treasurer, check with your county judge to make sure it has been submitted. DLG does send us late notices, and they will send a letter to the fiscal court and copy us on any clerk, sheriff, or fiscal court that is late in their submission of these quarterly reports. So for fee officials, for clerks and sheriffs, they must also complete a quarterly report and submit it to the sheriffs. The clerk and sheriff must submit theirs to DLG no later than the 30th day following the close of the quarters ending March 31st, June 30th, September 30th, and December 31st. So let's look at the county fee official's quarterly report a little closer. This quarterly report form is very similar to the fiscal court's quarterly report. The first page is a summary and reconciliation of all the accounts the fee official may have. Column 1 is the budget for the fee account. Column 2 is a cumulative amount of the fee receipts for the account and the expenditure, so it gives all the activity of the fee account. Columns 3 through 5 would be any other account the fee official may have. So if a clerk has a library and archives account or a federal grant account, if a sheriff has a drug forfeiture account, donation account, or other type of grant account besides just their fee account, those different accounts and other accounts should be reported in columns 3 through 5. And if there's additional accounts, you can always add additional pages to account for those additional bank accounts that are not your fee account. As you can see, just like the fiscal court, it has a bank reconciliation on the first page. So your book balance per this report must agree to your reconciled bank balances. If it does not, then you need to know there's something wrong and you need to figure it out as soon as possible. So if you would follow those bank reconciliation practices that Lleslie pointed out, when you get to this, your bank balances, your book balances should agree. So this quarterly report, that part of your reconciled bank balance should be very easy to do. Part 2 of the quarterly report for a fee official is where they report all their receipts. It's broken down by category and is shown by each quarter and then by yearly. So therefore, it's important to have good daily accounting of your receipts. You would total up the receipts, and this amount at the bottom for your total receipts will be taken to the front page of your quarterly. Part 3 is on disbursements. Again, it's broken down by category and quarter, and it's a couple of pages. And again, once you total up the total payments and total disbursements, you will take that to the front page. Both your receipts and disbursements from this quarterly report should agree back to your disbursements ledger. Part 4 of the county clerk's and sheriff's quarterly report would show any liabilities for that fee official, if they have anything, and it's similar to what's reported for a fiscal court. It reports the description of the liability, the term, the outstanding principal and interest, and other information about any liability or debt that you may have. So now you may be wondering, how do I ensure this quarterly report is correct? You should already know the answer to this. It all starts with keeping accurate records each day. If all your daily records agree from your receipts and disbursements, so if your daily receipt forms, checkout sheets, ledgers, the daily deposits all agree, all your daily expenditure records, invoices, checks, daily deposits all agree. So if all those agree, everything is actually posted to your ledgers. Your ledger categories kind of match your quarterly report. It's posted, then it's done monthly. If all your quarterly reports agree, then it's very simple to ensure that quarterly report is accurate. And again, if you do those bank reconciliations monthly, finishing up this quarterly report would be very easy. So again, it just starts with good daily records, a strong base. And receipts and disbursement ledgers, once they're accurate, you have to make sure it's completed, and then you turn it in by the deadline to ensure DLG is getting that by the deadline required. While the quarterly report is very important to be filed, there are other quarterly responsibilities that you have. For example, just one that I'm pointing out is on payroll reporting. There is some quarterly reports that you have to file, but there's also things you have to do monthly, quarterly, or annually. So you need to ensure that payroll reporting is done correctly. Also, you need to make sure those bank reconciliations are done from that payroll account. We go into a lot of county fiscal courts or other offices where they have a separate payroll revolving fund, and they're not reconciling that bank account. So make sure, just like your other funds, your fee accounts, that payroll revolving account is getting reconciled just like any other account. And, when you file those reports, you want to make sure they're filed timely. You don't want to be assessed any penalties and interest for missing a payroll reporting deadline. As discussed earlier, penalties and interest is not an appropriate use of taxpayer dollars and is not an allowable expenditures. So I went over your quarterly responsibilities. So Leslie's going to finish this up and go over the annual responsibilities, and then she'll go over the important dates that that some of you have for your office. So I'm going to turn it over to Lleslie.
Okay, so we've reached the top of the pyramid now. So we're up to the top of an annual, your annual financial statements. So I'm going to go over that, and then some important dates for the fiscal court, clerk, jailer, and sheriffs. So we'll start with the fiscal court. So the fourth quarter report, we've talked quite a bit of detail about those. So the final quarterly report filed by the county with DLG is due within 15 days after the end of the last quarter of the fiscal year. So that would be July the 15th. And this is deemed the Uniform Financial Information Report for the county. So this is going to be your financial statement. And then the fiscal court also has the treasurer's settlement. And at the close of each fiscal year, the county treasurer shall, within 30 days after the close of each fiscal year, so that would be July the 30th, make a complete settlement of accounts with the fiscal court. And then after the fiscal court approves the settlement should be filed in the office of the county clerk. Okay, so this is an excerpt from the budget manual, and you can see the highlighted portion there at the bottom is just what we went over about when the report is due, 15 days after the end of the last quarter, and that states this shall be deemed the Uniform Financial Information Report for that county. Okay, so something that is required to be submitted to DLG with your fourth quarter report is your schedule of expenditures of federal awards, or the CFA, and it is part of your annual financial statement. And it'll be used to determine if you need an audit of your federal awards, which is a single audit. So some things that are included on the CFA is the federal grantor, which is the federal agency that you received the grant from. If your grant was passed through an agency, that needs to be listed on there. Your program or cluster title, the federal CFDA number, which now is called the Federal Assistance Listing Number. And if your grant was passed through from an entity, there should be an identifying number, and that would come from your grant agreement. Also, if you provided anything to a subrecipient, that should be included, and then the amount expended. So let me just add a little note here to please make sure that you keep all of your grant agreements. Your grant agreements are going to help you to fill out your CFA. You need to read them and be aware of compliance, things that are required of you. So, a lot of times we come in to do the audit and the county doesn't have their grant agreements, and then they're struggling to try to find those. So please make sure when you get grants, keep all of those agreements and read them so that you know what your requirements are. Okay, here's an example of a CFA, and this was pulled from the DLG website. It's an Excel file. You can find it there. This is just an example, and you can see the information there, some of the things that I just went over. So like I said, you can use your grant agreements to help you fill this out, and also the CFDA website will help you to get for some of your federal grantor and the numbers, and that's at sam.gov. So that will also help you fill this out. And one thing too to add is the CFA is based on expenditures, not what you receive. It's how much that you actually expended. So when do you need a single audit? Well, if your federal expenditures, the amount you spent, exceeds $750,000 in a fiscal year, then you will be required to have a single audit, and we will perform that as part of our fiscal court audit. And there's also something now that instead of a single audit, there's an alternate compliance examination engagement that you might be eligible for, but there's certain criteria that has to be met for that, and auditors will go through that process when they come to do your audit. So just make sure that you have all your grant agreements and that you have completed a CFA, and that's been submitted with your fourth quarter report. Okay, jail commissary. So per KRS 441-135, the jailer is required to annually report to the county treasurer on the canteen account. So this is going to be books of accounts for receipts and disbursements. And here's a copy of what that looks like. And this is also comes from the DLG budget manual. And it's basically reconciling your cash balance to your book balance to your bank balance, kind of like a bank reconciliation. And this is to be filled out annually and submitted to the county treasurer. Okay. Annual settlement for fee officials. So the sheriff, this is KRS 134-192, are required to settle your tax account by September 1st of each year and your fee account by March 15th. And the county clerk is required to settle fee account by March the 15th. So that would be presenting settlement to fiscal court and your excess fees. So how do you ensure your annual settlement and the fourth quarter is correct? So this slide is just kind of a repeat of something that Jim went over, that it just starts with accurate recording each day. So if you've got good daily bookkeeping, then it's going to be easier to reconcile and to balance monthly and quarterly and annually. But it's like building the pyramid. You need to start with a good base, as you've heard that. You're probably tired of hearing that by now, but it's so true that if you have good daily records, then it should be a lot easier to move forward. So, your daily receipts, your pre-numbered receipt forms, your daily checkout sheet, your daily receipts ledger, your daily deposit, all should agree. And then on the disbursement side, your invoices, checks, and your daily disbursement ledger posting, all of those should agree. So if those agree, then your monthlies agree, then you should have an easier time balancing your fourth quarter report at the end of the fiscal year. So your ledger categories should match the categories and accounts on your quarterly report. It should be posted to daily and agree to your daily records. It should be totaled monthly, quarterly, and yearly. Should agree to your quarterly reports and final settlement, and then ensure that you submit your quarterly reports to DLG as required. And then on your monthly bank reconciliations, they should be completed timely and reconciled to your ledgers. And timeliness on the bank reconciliations, like we talked about earlier, are very important, because it's hard if you're behind several months and then you go back and try to recreate those. It's very hard. So it's important to do those timely at the end of each month. So follow up to make sure everything is being done. So, you shouldn't just, like Jim said, you shouldn't just assume that it's being done. You need to make sure everything should be reviewed to ensure accuracy. And if you do any type of review, document those, sign off on it. Okay, important dates. So just a little disclaimer here that, these are just a few of the important dates that you should be aware of. It's not all inclusive. So we'll talk about fiscal court first. So by January 15th, the fiscal court should approve the fee office budgets. By April 1st, the jail fund budget should be submitted to the fiscal court. And then by May 1st, a complete county budget should be submitted to fiscal court. And you can see the KRSs that require those dates are listed there. And then by June 1st, you should have the first reading of your proposed budget ordinance. And not less than 7 or more than 21 days prior to adoption, you should advertise the second reading, publish the summary of your proposed budget, and submit 3 copies to the state local finance officer or DLG. Okay, at least 7 days prior to adoption of your budget, you should post a copy of it near the front door of your building, courthouse. Have your second reading and adoption by July 1st. And then within 15 days following the adoption by the fiscal court, submit a copy of the adopted final budget to DLG. And again, the KRSs are listed there. Okay, fourth quarter report. So the final quarterly report filed by county with DLG within 15 days after the end of the last quarter of the fiscal year. So that would be July the 15th. And then again, the treasurer's settlement is due by July 30th, 30 days after the close of the fiscal year. Okay, here's a little brief timeline for the county clerk. So by January 15th, your budget must be approved by fiscal court. No later than 30 days after each quarter ends, your quarterly report should be submitted to DLG. By March 15th, have a final annual settlement presented to fiscal court and present excess fees. And if you are fee pooling, of course, you need to follow the direction of the ordinance for monthly submissions to fiscal court, whatever that may be. And then the last one there is the storage fees. And this is something kind of new for clerks. So per KRS 64.12, those storage fees should be accumulated and transferred to the fiscal court on a monthly basis for 10 days, within 10 days following the end of the month. So by the 10th of the month, you should submit those storage fees to fiscal court. Sheriff timeline, similar to the county clerk. By January the 15th, your budget must be approved by fiscal court. No later than 30 days after each quarter ends, your quarterly reports are due to DLG. And by March 15th, you must have your final annual settlement presented to fiscal court and present excess fees. And for your tax account, your monthly reports are due by the 10th of the month. And your yearly settlement of your tax account is due by September the 1st. And then also within 60 days after the close of the fiscal year, you have your asset forfeiture report that's due to the Kentucky Justice and Public Safety Cabinet. And again, like the clerk, if you're in a fee pooling county, you need to follow the direction of the ordinance for monthly submissions to fiscal court. Jailer timelines. Your jail fund budget must be proposed and submitted to fiscal court by April 1st. And following each fiscal year end, like we discussed, you have an annual financial report for the commissary funds that's due to the county treasurer. And you can also find more commissary information in the DLG budget manual. And there's some page numbers listed there. And just a few other important dates. Your single audit deadline would be March the 30th. Publication for your audit would be within 30 days of our audit release. And then the continuing disclosure requirement varies. You need to read your debt documents. And for those that are not familiar, what is a continuing disclosure requirement? It's this is included in your debt instruments. You need to read those, but you have to update annually the financial information and file annual audited financial statements. They must be made to something called EMA, and which it's a municipal securities electronic access system. And so, so these deadlines, there's dates to file these, and your audits should be done by that time. So these would be included in your agreements that you sign for your debt. So you need to keep all those, read those, and know what they are. Okay, so we thank you for your attention this morning. We hope the information has been helpful to you. And as always, you can reach out to us at any time. If you have questions, we'll be happy to help you as you transition into your new roles within your county and local government.
All right. Before we turn it over to questions, I'm just going to add a little bit more. Like Lleslie said on that one slide about document it, everything that you do for your daily receipts, to your bank reconciliations, to anything that you do, you need to have it documented. So when we come in to do that testing, like Farah said, we're going to take samples. We're going to test a set amount of daily receipts on a clerk and sheriff's audit. We're going to pull those daily receipt forms. Glenn will be going over later this afternoon about the records you need to have available, but that's why it's important to have that information. So any software system that you have, you should be able to have that information ready and available for the auditors when they get there. So that's why you need to document it. Those bank reconciliations, make sure you have those documented. Like Lleslie said, I know we have been in offices where the bank statements have never been opened. They just hand us the envelope when they receive them, and it hasn't ever been opened. Make sure those bank reconciliations are done. Even if there's no activity in that account for the month, go ahead, reconcile the account. That reconciliation will be very easy to do because there was no activity, there was nothing. It should just pretty much reconcile itself. So keep that documentation. Lastly, get a copy of the DLG budget manual. Go out on DLG's website, get a copy of that budget manual, read it, become very familiar with that. DLG will have budget meetings and budget trainings later I think in February. You can get on their website, sign up for their budget meetings. We work closely with DLG. So anything, you can do to make sure you are following that uniform system of accounts, do that. Then look into the KRSs. LRC's website, the Legislative Research Commission, they have a website on all the KRSs out there. Try to become familiar with the ones that are applicable to your office. If you're looking for the fees of a county clerk, there's a KRS on the, multiple fees of the clerks, sheriffs. It has your county treasurer duties. So that would be very, look at those KRSs. They also have very simple guides, like, the duties of the elected officials. If you would pull that manual down from LRC, with again the duties of elected officials, it will tell you all a lot of the duties of the clerks, sheriffs, fiscal court, magistrates, and it will give you KRSs and helpful places to find those duties. So that's all we have for you. So Jonathan, do we have any questions or anything that you want to send our way?
We do. Thank you. One quick one that popped up, a couple people have again asked if we're going to have the PowerPoint presentations available, and yes, we'll send those out. I know there was a lot of great useful information in there, the timelines especially, you want to go back and look at those and see. So yes, we will provide those. And I want to thank Lleslie and Jim both for providing a well-rounded presentation, because again, we've got jailers, we've got clerks, we've got magistrates, we've got sheriffs, we've got everybody. We've got all different types of officials in this training. So we know that you all have different dates that you're worried about, different topics that affect you. So thank you all for touching on that, and hopefully we'll be able to answer any questions you may have. We did have a few come in. We had probably more than we have time for, but I wanted to just touch on a few of them, Jim. And this one was a little bit earlier, and it said that they wanted to make sure they heard and they understood correctly. If you have to make daily deposits, you have to make daily deposits even if you have a small amount of funds brought in for the day, correct?
That is correct, Jonathan. Yes, daily deposits are required to be made. The only exception I can think of is for a PVA. A PVA, if you're on here for a PVA, they have other requirements. They kind of fall under, since they're more of a state official instead of a county official, they fall under finances requirements for deposits, and they have a little bit more, if they've received so much money, they have to make a deposit at a certain time. So PVAs are the only difference, but all other county officials, fiscal court, treasurers, county clerks, jailers, sheriffs, they all need to make a daily deposit, even if they received a quarter, because it's important that all those funds get deposited. Cash, if cash laying around, it has legs and you don't want it to walk off. So that's why it's good to actually deposit those funds daily into a bank account.
Okay. How about this one? If I have a computerized system, do I have to print out 3 copies of the receipt forms since they're required to have 3-part receipt forms?
That's a good question. You wouldn't have to print out all 3 copies. I mean, that computerized system, you would print out a copy to give to the customer, to the taxpayer. Then most systems will be able to print out like a batch. It would maybe a listing of all the receipts for that day. It will give all the pre-numbered receipts, who paid it, the amount. It would have a total. So that would be kind of your batch receipt, because as long as it can print out a summary of all receipts given for that day. And then, the third copy that has to be maintained, it's in the system. So if needed, you can always print out the actual receipt form. So if we needed an actual receipt form for that day, as long as your system can print that out, then that's could be the third copy. So like, again, one goes to the taxpayer. If you have a checkout sheet that can actually summarize all those receipts, you wouldn't need to print them out. But if you have like a receipt roll, if it's a cash register type thing, keep those actual register rolls of all the receipts. We need all those copies. So if we pick a day, we'll need to see that backup of those cash register receipts, that roll of tape, whatever to back that up.
All right, last one. Yes or no, Jim? Can your auditors help us set up our ledgers and accounts?
No, as Farrah discussed, we have to maintain independence, so we can't set up your books. All we can do is give you some helpful suggestions, maybe some categories, things to help it make it easier for you to do, but we can't say go out and use this system, or this is exactly how to set it up, because we can't go back and audit that.
Okay.